What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. We made 8,000 subscribers on this channel. You guys are amazing. And I have a new stock that I bought, and these are high yield dividend stocks to buy in April. Again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I love this one. I'm going to explain to you why I bought it. So I'll do a stock analysis and dividend stock analysis. And I also have two other dividend stocks for you guys to check out. So if you're new to this channel, make sure you hit that notification bell so you don't miss future videos. Smash that like button. And tomorrow I'll show you my dividend income for the month of March. So let's check these stocks out right now. And the first one is Capital Southwest Corporation. I just bought some shares today on my M1 Finance dividend portfolio. Symbol is CSWC, has a price of $23.94 right now. It is a little bit down. It was keeping up with the S&P in a little bit in the past 5 years. Has a dividend yield of 8.02%, a PE ratio of 15.44, market cap of 567.76 million US dollars. Year range is 2216 to 2841. Its day range is 2369 to 2416. Its previous close was 2373. A lot of you guys that are new, I'll do a quick review on these guys. So they're an internally managed, credit-focused business development company that is an active capital provider to middle market companies across the capital structure. So don't forget, a business development company, just like a real estate investment trust, 90% of what they make have to go back to the shareholders because, or the people that buy shares, because that's part of the law, or else they get a big penalty. So that's one thing about these guys that's very interesting. So I'll go over their portfolio real quick. So since their inception, they have supported over 285 companies spanning over multiple decades with acquisition and growth capital. These companies below represent our current portfolio of investments. It's actually really big. The Southwest Terminals, Industrial Products, Spotlight, Business Services, Telecommunications, Telehall, Environmental Co., Arbor Works, not Arbor Realty Trust, Everest Transportation Services, and don't forget Arbor Realty Trust. I didn't have them listed, but ABR is a high yield dividend stock. I have that one. It's a mortgage-backed real estate investment trust. Absolutely love that one. Air conditioning specialist. I mean, you go on and on with these guys. And this is what attracted me to these guys. So Infolinks, media, just so many things that they're well diversified. And you know what they have done as a business development company, Wellfoam. I mean, just so many. The diversification is fantastic, and their revenue is fantastic, and their dividend history is fantastic, which I'll go over. Again, as a business development company, those are hard investments. You have to really do your due diligence in these, and this is why I bought these guys. I love the revenue that they have done. Again, the symbol is CSWC. This is in millions US dollars. 9.94, 9.16, 23.47, 35.12, 51.881, 2020 62.039, 2021 68.062. So right here, 2015 994, 2021 6806. So these guys are doing something right, and because of that, that's what attracted me to buy these guys as a dividend investor. It's a high yield dividend stock. That's one thing that really attracts me with these guys. And their dividend hikes are very nice. Check this out. This is out since 2016. 17 cents, 45 cents, 21, 24, 26, 28, 89 cents, 44, 46, 48, 49, 50, 125, 51, 52, 53, 54, 97, and 48. So you're getting a trend that's slowly going up as a business development company. It's like they have this special one that they throw at the end, kind of like a coup de grace, you know, for a quarterly dividend. But that's very attractive, and that's why I own these guys. I have a pretty decent percentage. I think I have about 3% in my M1 Finance dividend portfolio. And again, it's 8.09%, PE ratio of 15.41. Annual dividend of 192. So you have to be careful when you look at stocks that have a 5% plus dividend. You got to be wary a little bit and understand, why is it higher? Can it be a yield trap? Is it in demand? Obviously, these guys are doing something well. Same thing with Arbor Realty Trust. If you watch my previous videos on these guys, they are a high yield M rate the revenue is backing them up. So the revenue is backing up CSWC, which makes me attracted, and it appears that I'll probably be long in them. Again, things can change. I mean, I sell certain stocks that I can't keep up with, and I actually did sell Exxon, and this is not an April Fool's joke. And I'll explain to you why, because I bought another dividend stock instead. But I'll probably rebuy it eventually. It's just the percentage went up so high, and I couldn't keep up with it, just like IIPR in my M1 Finance dividend portfolio. Let's check out the next dividend stock, and I'll save the new one that I bought for last. All right, let's check out the second dividend stock. And this is a new kid on the block, AFC Gamma. It's sitting at 1928. AFGC is a symbol. Its dividend yield is 11.41%, a PE ratio of 12.68, volume of 145.46K, market cap 380.64 million US dollars. Year range is 1807 to 2550. Day range was 1902 to 1944, and its previous close was 1912. A lot of you guys are saying, who the heck are these guys? I'll show you. So Advanced Flower Capital Gamma is a leading provider of institutional loans to high-quality Mary Jane, I can't say that or I'll get in trouble, companies nationwide in all aspects of production, cultivation, processing, and distribution. We offer loans and related facilities, generally secured by the substantial assets such as real estate licenses and cash flow. Within years of combined lending expertise and real estate experience, AFC Gamma's principals are now focused on the exponential growth of the Mary Jane industry. So I can't say C word because I can get in trouble. AFC Gamma is a real estate investment trust which gives investors access to income-generating commercial and real estate investments, not only a real estate vehicle appropriate for a real estate lender, but a REIT that offers investors several benefits. It's income-oriented, with REIT participants eligible for a steady stream of distributions, and since REITs earn their tax exemption by distributing at least 90% of their income, like I said, BDCs as well, to unit holders annually at a 25% qualified business income deduction, REITs can typically generate more higher yielding taxable cash flow to their investors. I like this one because IIPR is a good one, and I'll show you revenue-wise why I like these guys as well. These guys are so new, so I'm not gonna, you can't even go on macro trends to go over the trends. The revenue in March 2021 was 4.62 million. The net income was 1.4 million. The diluted EPS is 0.19. Net profit margin 30.33%. Operating income 1.55 million. Net change in cash 117.17 million. So then June, 8.1 million. Net income 4.63. Diluted EPS 0.34. Net profit margin 57.11%. Operating income 5.11 million. Net change in cash negative 2.15 million. I'm not too concerned yet. Revenue is increased in September 2021, 9.96 million. Net income 7.93 million. Diluted EPS 0.47. Net profit margin 79.66. Big deal. Operating income 6.11 million. Net change in cash negative 54.63 million. I'm not too concerned still. Revenue 11.69 million, net income 7.04 million, diluted EPS 0.41, net profit margin 60.25, operating income 7.2 million, net change in cash 39.27 million. So we have a new kid on the block. Now this is, buying REITs is a risk, especially new kids on the block. But since these guys are so well diversified and they're founded in July 2020, I'm going to take the risk in buying these guys, and I'm going to show you their dividend history. So check out the dividend history with AFGC is a symbol, AFC Gamma Incorporated common stock. It's 38 cents in 6/14 2021, 9/29 43 cents, 12/30 2021 50 cents, 3/20 2022 55 cents. So you're seeing an increase in the dividend. Now again, the PE ratio is 13.45. Who cares? FFO is more important. Dividend yield is 11.51%. Annual dividend is $2.20. Now there is a risk. Again, this is not financial advice, for entertainment purposes only. Disclaimer in the description. This is kind of a new kid on the block, is a dividend stock. So it is a risk with that one. Now I'm going to reveal to you the dividend stock that I bought on my M1 Finance Dividend portfolio, which I actually absolutely love, and actually I'm going to probably be long on. Check this out. That stock is Mplx. It's sitting at 33.28, a dividend yield at 8.47, a PE ratio of 11.64, volume 2.54 million, market cap 33.77 billion US dollars. Year range is 25.26 to 34.59. Its day range is 33.27 to 33.94, and it's sitting at 33.19. So what do I like about these guys, and why did I buy them on my M1 Finance Dividend portfolio? Check this out. So check this out. Mplx is a diversified large cap master limited partnership formed by Marathon Petroleum Corporation, MPC, that owns and operates midstream energy infrastructure and logistics assets and provides fuels distribution services. Mplx assets include a network of crude oil and refined product pipelines, an inland marine business, light product terminals, storage caverns, refinery tanks, docks, loading racks, and associated piping, and crude and light marine terminals. The company also provides crude oil and natural gas gathering systems and pipelines, as well as natural gas and natural gas liquids, processing, fractionation facilities in key U.S. supply basins. Say that 10 times fast. Now, what I like about these guys, I'll go over a few things, revenue and dividend history, but you got to see what their territory is. And that's what attracted me to buying these guys. And these guys are doing something right. This is in millions of US dollars. 2014, 793. 2015, 1,101. 2016, 3,029. 2017, 3,867. 2018, 7,005. 2019, 9,041. 2020, 7,569. You can blame the pandemic, but I'll show you a few more trends with these guys. You have to be crazy to say this is not a good dividend stock just looking at these trends. 2013, 28 cents, 29 cents, 31 cents, 41 cents, 47, 50, 51 cents, 52 cents, 54 cents, 56 cents, 60 cents, 63 cents, 66 cents, 68 cents, then it hit 70. You can blame the pandemic right in this little stretch. 128, okay, that's probably a special dividend that they provided. And then right there at 70 cents. So it's sitting at 33.30 with a dividend yield of 8.33%, a PE ratio of 11.6, annual dividend of 282. So let me know what you think of this video. If you guys are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Do you like all three of these dividend stocks? Now, I did sell Exxon, but I'm probably going to buy it again. So, you guys can give me some heckling if you want. But, I made a huge profit on it, and I'll probably rebuy it. Just caused a huge imbalance to my M1 Finance Dividend portfolio. I bought a lot of things during the pandemic, and I kind of capitalized on the dip, and I'll probably rebuy it. But this one is so attractive right now. I couldn't say no to it. So again, tomorrow I will post a video with my dividend income. And you guys have been amazing on this channel. We're at 8,000 subscribers, so make sure you hit that notification bell as soon as you subscribe and smash that like button. You guys take care and have a great weekend.